Bruce, welcome. Good to have you with us. As Steve mentioned, the word that is in the air these days, and that is soft landing. What does a soft landing mean to you, and what are the odds we have one?
So a soft landing to me means that the Fed, after having tightened here, can engineer an expansion which would last, I think, at least 2 or 3 years down the road. I think the chances for that have improved. I think we have clearly shown the resilience in the economy. This is not an economy where we're debating whether it's moving towards a recession right now. I think we've also taken out the risk that inflation will stay in a very elevated zone. But I'm still somewhat skeptical we can get inflation all the way down and that the Fed is going to be able to take its feet off the brakes. So I think the risks to the economy as we look forward, not for the next 3 months, but for the next 12 to 18 months, still remain relatively elevated.
Risk to the economy elevated. Let's talk a little bit about jobs, because that's going to be the number that we're going to be focused on tomorrow. It looks like some of the jobless claims numbers were pretty much in line with expectations, nothing alarming there. What do you expect on payrolls tomorrow? And is the job market showing some, if any, signs of slowing up just a bit?
So I think we should step back here and recognize the job market was booming last year. We had a number of things that were normalizing, providing that, and we're slowing. We're definitely not going to continue to have 400,000 job growth a month. However, as you noted, the claims data is signaling still a healthy labor market. I think businesses are still expanding. I think settling somewhere in the 150 to 200,000 range is a reasonable forecast for the economy for the next 6 months or so. Having said that, we believe that tomorrow's number is going to be lower than that. We're looking for 125,000 gain because we think there's going to be a bigger impact of the striking workers, particularly the Hollywood strikes, than most people expect. But I would look through that, just like as Steve was saying, there's a lot of things to look through in the numbers as we go month to month. I think the payroll number will be somewhat distorted to the downside tomorrow.
Steve, you have a comment here?
Yeah, well, first of all, I smiled when I heard that I was going to be on with Bruce today, because I had a question for him anyway. So I just want to throw this out. Of course, I'm a big fan of Bruce Kasman at JPMorgan for many years now. Here's the thing, Bruce. Today, the goods number showed deflation in the PCE. And then I went and looked up what the BLS is saying about import prices from China. And I'll read you a little bit as if you don't know this, but I think maybe viewers don't really. The price index for imports from China declined 2.3% for the year ending in July, the largest 12-month drop since November 2009. My question to you, Bruce, is the deflation from China already in the numbers, or is there more to come? And will this provide an offset to any remaining or residual service inflation in the economy?
So I think there's plenty more to come, and I think you're right in pointing out the role of China as exporting its excess supply through finished goods price deflation. That's going to continue. I'd also note we're going to have some of that come from the fact that global manufacturing has been weak for almost a year now. So one of the things you're seeing in the inflation number is significant downward pressure on finished goods prices. That's not going to go away, but that is not going to be with us for 2 years. That's going to be with us for the next 6 months. And I think the big call on inflation is the interaction of labor markets and service prices, where that's going to settle. As you mentioned, Steve, there's a lot of different ways to slice that data up. I think the key thing to watch going forward is the relationship between housing costs and healthcare costs. Healthcare costs have a lot of reasons to go up at a more rapid pace. And I personally think we're going to settle somewhere above a 3% pace when the dust settles.